Good afternoon and welcome to our webinar where we'll be discussing the importance of beneficiaries and estate planning. We'll give everyone a few minutes to join the webinar and we'll commence shortly. Good day. My name is Clive Joss and my role at Brighter Super is a member account specialist. We meet with members on a regular basis and part of our discussion is the importance of understanding the options for nominating a beneficiary in your superannuation and pension account. It's one of our popular topics at our seminars, and we hope by the end of this session you'll have gained a further understanding of beneficiaries and estate planning. Brighter Super acknowledges the traditional owners on the lands of which we're meeting and pay our respects to their elders, past, present, and emerging. We acknowledge and celebrate the continuation of a living culture that has a unique role in this region. It is important to understand that the information and examples contained in this presentation are general in nature and have been prepared without taking into account your individual objectives, financial situation, or needs. It's important when making decisions about your super options that you obtain the relevant product disclosure statement and target market determination and consider your own personal circumstances. You can access these documents and the Financial Services Guide from the Brighter Super website. Today's presentation will run for about 30 minutes. Many of you have submitted questions already, which we've tried to incorporate into the presentation. You can also post questions in the Q&A feature during our presentation today, which you'll aim to answer directly. We have Jack standing by as a moderator today. He has been with the fund for over 5 years, and he, like myself, is regularly out in the field providing super health checks to members in the regions across Queensland.
Hello, everyone. Looking forward to answering your questions as well as learning more about beneficiaries. Thanks, Clive.
Excellent. Thanks, Jack. We should have time for questions at the end and we'll try to answer as many as possible. We'll also be running some poll questions throughout today's presentation. When the question pops up on your screen, please just click an answer that is appropriate to you. Don't worry about taking too many notes, as we will send you this recording in the coming days. Before we move into our main subject, I would like to take the opportunity to briefly explain who we are, as we have some non-members joining us today. The merger between LGIA Super and Energy Super, plus the acquisition of Suncorp Super, has enabled us to increase our size and scale, yet we remain committed to investing in the personalised member services that you know and enjoy. We serve over 230,000 members with $32 billion in funds under management, and we receive double-digit returns for the balanced accumulation and balanced pension options for the year to 30th of June 2024. Now, let's talk beneficiaries. So what is estate planning? An estate plan aims to preserve and maximize the amount of wealth possible for the intended beneficiaries and flexibility for the individual prior to death. This allows you to be in control of how you would like your estate distributed to look after your loved ones. An estate plan helps you protect your family and loved ones, optimize tax upon transfer of assets in a legal and logical manner, and ensure that your wishes are followed. Remember that your estate typically consists of everything you own, which are your assets, and everything you owe, known as your liabilities. Superannuation can be one of those assets. It doesn't automatically form part of your estate because super is held in a trust, managed by the trustees of your super fund. A death benefit is generally the amount of money in your super account plus any insurance you may have at the time of your death. Whether it's a little or a lot, it could go a long way in supporting your dependents after you've gone. If you've already provided your nomination to Brighter Super, this may expedite the process, which provides peace of mind for where your superannuation death benefit will be paid. Again, it's important to note that a superannuation death benefit does not form part of a member's estate and is not necessarily paid as part of the will. If there is no valid binding death benefit nomination, then Brighter Super will determine the distribution of the benefit, subject to the requirements of our trustees, governing rules and legislative requirements. In allocating a superannuation death benefit among the members' dependents, consideration is given to those dependents who might have expected to continue to receive financial support from the member. When no beneficiary nomination is listed, the benefit is generally paid to the deceased member's personal legal representative, also called the executor or administrator of the estate. It can take up to 3 times longer to pay out a death benefit if you do not have a binding death benefit nomination in place. You can nominate a beneficiary at any time. You can also review your current nomination by logging onto your member online. There is a tab headed Beneficiaries, which will provide you with your current nomination. It is important to review this to ensure that it is up to date and valid. It is especially important to review if you have had a change in personal circumstances. For example, marriage, divorce, at-risk children, and so on. Your current beneficiary nomination will be detailed in your annual statement each year. There are a couple of beneficiary nominations on the screen, but one I want to call out to you is a binding nomination. A binding nomination legally binds Brighter Super to pay your death benefit to your nominated beneficiary or beneficiaries. This requires a specific form to be completed, which can be found on our website. We have listened to our members, and you can now select a non-lapsing option nomination, which means that you do not need to renew the nomination every 3 years. Making a binding nomination puts you in control. If you have more than one beneficiary, you can decide that what percentage of the benefit each would receive. For example, your partner could receive 50% and your 2 children could receive 25% each. A binding death benefit nomination gives you certainty over where your money will go. It may be particularly useful, as mentioned, if you have a more complex family situation, such as an ex-partner or children of current and former relationships. A binding death benefit nomination is a legally binding document that obligates Brighter Super to pay your benefit to your nominated beneficiary or beneficiaries, provided the nomination is valid at the time of your passing. All nominations could carry risk if your situation is complex, and you should seek estate planning advice. Shortly, we will discuss the difference between a binding death benefit nomination and a binding non-lapsing nomination. And also, for members who hold a pension account, we will cover reversionary nominations. Now, on to our first poll for today. Have you nominated a beneficiary? Yes or no? Excellent. That's really pleasing to see. As you'll note, most of you have nominated a beneficiary, but there are a few that need to consider that and to get involved. You may have noticed I mentioned a few times that your nomination must be valid at the time of your death. Let's have a look at who you can nominate as a beneficiary. Superannuation legislation dictates who can receive all or part of a superannuation death benefit. The member's dependents and the member's legal personal representative. A legal personal representative, or LPR, is the executor named in your will or the administrator of your estate. If you nominate an LPR to receive your super benefit, then your LPR will distribute the super benefit according to your will. Under superannuation law, a dependent may include a spouse, whether legal or de facto, a child, including an adopted child, an ex-nuptial child, a stepchild, and anyone who fits the definition of a child under the Family Law Act of 1975. Any person who had an interdependency relationship with a deceased member, and any person who is financially dependent, whether wholly or partly, on the deceased member. I think it is fairly clear what the definition is for a spouse or child. Let's delve a little deeper into who is considered a financial dependent and what is the definition of an interdependent relationship. Financial dependence. A financial dependent is somebody who was wholly or partially financially dependent on the member at the time of their death. This may include being reliant on the deceased for the payments of bills, rent, or shared financial commitments, such as a mortgage. Documents proving the financial dependency would need to be provided to Brighter Super at the time of the claim. Interdependent relationships are when two people are in an interdependency relationship if they have a close personal relationship and they live together, and one or each of them provides the other with financial support, and one of them or each of them provides the other with domestic support and personal care. In order to satisfy the criteria for interdependency, all four criteria must be met. So what happens if you don't nominate a beneficiary? If there's no valid binding death benefit nomination, then Brighter Super will determine the distribution of the benefit, subject to the requirements of our governing rules and legislative requirements. This means we look for dependents and determine how best to distribute your benefit. Death benefits are tax-free if paid to a tax dependent. This includes a spouse, married or de facto, a child under the age of 18 years, including stepchildren, adopted children, ex-nuptial children, and anyone who fits the definition of a child under the Family Law Act of 1975. Anyone who is financially dependent on you at the time of your death, a person who you shared an interdependent relationship with. Let's go into how the benefits are taxed in more detail on the following slide. In most people's circumstances, there are two taxable components, a tax-free component and a taxable component. The tax-free component of funds contributed after tax as a non-concessional contribution. These contributions aren't taxed on the way into super as they have come from previously taxed source. An example is if you received an inheritance or sale of an asset and put the money into super. The tax component generally holds the greater portion of your super balance. These are the contributions made by your employer, salary sacrifice, and personal deductible contributions plus earnings. These monies have been taxed concessionally at 15% on the way into super. If the benefit is paid to somebody who is not considered a dependent, the taxable portion of the benefit is taxed at 15% plus the Medicare levy. The taxed and untaxed components are calculated at the time of payment. Generally, everyone has taxable components in their super. The amount in each component will determine how this could be taxed when paying out the death benefit payment to a non-tax dependent. Let me give you a simple example. This case study illustrates the potential tax payable for a non-tax dependent. On passing, Jamie has a total balance of $500,000 and wanted to leave this to their adult child. This is made up of the tax component of $400,000, which consists of the contributions their employer made during their life plus earnings. The potential tax payable is 17%, which equals $68,000. This will be deducted and paid to the ATO prior to Jamie's adult child receiving the death benefit. The other $100,000 is tax-free and would pass in its entirety to their child. The total Jamie's child would receive after tax is then $432,000. You can find your individual taxable component on Member Online through the Benefit Quote tab. If you are concerned about your tax position, there are potential strategies for reducing tax on death that our financial advice team can discuss with you. I would suggest seeking advice for your own personal circumstances if you feel these strategies may be of benefit to you. Later in the presentation, we will share how you can contact them. Now, onto our second poll question. When did you last check your beneficiary nomination? Within the last 3 years, within the last 3 to 5 years, or 5+ years, or never? Excellent. Good to see that most of you have looked at it fairly recently, though there is a bit of concern as a number still have not looked at it, or it's been some time since they've actually had a look. There are different types of death benefit nominations. Today we are focusing on binding nominations and reversionary nominations. A non-lapsing binding nomination does not expire. However, its validity will be assessed at the time of your death. You can change or cancel your nomination at any time. Your form must be witnessed by 2 people over the age of 18 who are not nominated as beneficiaries. Everyone must sign and date the form on the same day. The form can have no errors, so do not cross out any initial any errors as the form will be rejected. If you make a mistake, print a new form and start again. You can post or email the form to us for processing. Another important note is if you are nominating more than one beneficiary, then the total of all shares allocated to each beneficiary must equal 100%. Remember to update your nomination whenever your situation changes. The other option is a reversionary nomination. Reversionary nominations only apply to members with a pension account. A reversionary beneficiary nomination allows you to have your pension continue to be paid as a pension to your beneficiary, generally your spouse, upon your death. You are also able to nominate a binding death benefit nomination instead of a reversionary beneficiary. A reversionary nomination is legally binding and does not lapse, and we recommend reviewing your reversionary nomination regularly to ensure that it is still appropriate for your situation. Who you can nominate as a reversionary beneficiary is outlined on the form. This is generally your spouse, although there is an option for children. However, this is age, financial, or disability dependent. Please refer to the form for all the relevant options. You can also refer to the Brighter Super Pension Product Disclosure Statement for further guidance. They may be Social Security or tax implications for your potential beneficiaries when making a reversionary nomination. Our financial advisors may be able to help you decide how best to deal with your superannuation. Apart from seeking financial advice, we would also suggest you seek independent estate planning advice. Lau Ann Chow from YHC Lawyers often presents at our face-to-face seminars where she speaks about the importance of wills and estate planning and enduring powers of attorney. YHC Lawyers details are on the screen. And if you're interested in speaking to them about your situation, you can scan the QR code for further contact information. What makes Brighter Super different to other superannuation funds? It's our commitment to personal service. We have a dedicated team of member account specialists here to help support you. If you'd like to talk to one of our staff one-on-one for more general information about your super, why not book in for a super health check? A super health check covers a variety of areas and includes reviewing your beneficiary nominations. If you'd like to book now, there is a QR code on the screen. You will receive a link to book a super health check in the coming days alongside today's webinar recording. Our team services members all over Queensland with face-to-face services and also digital channels. So you can get some general advice on a range of superannuation topics, no matter where you live or work. We offer a range of personal advice options suited to individual members' needs. If you're looking for specific information about making contributions or investment strategies, our intra-fund advice team can help. Book in for an over-the-phone meeting with a financial advisor at no additional cost. Two of the most common questions members ask as they approach retirement are, how much super do I need to retire? And do I have enough super? A retirement health check with one of our financial advisors will help you answer these questions. We also offer both as a scaled and comprehensive personal advice service. This service takes a complete view of your financial situation to tailor advice to suit your individual needs and is a face-to-face meeting with our advice team in Brisbane or at various regions over Queensland. Appointments may also be arranged via digital channels. The cost will depend on the complexity of the advice, and this cost may be deducted from your Brighter Super accumulation account. It's never too early to start planning for retirement, so talk to us to find out how we can help. Similar to today's beneficiary webinar, our seminar page includes a range of upcoming webinar topics. Keep an eye on this page as we update it regularly. On the previous two slides, we discussed our range of advice services. These cover our super health checks and intra-fund advice, both of which are at no additional cost to our members. To other types of advice, such as a retirement health check, scaled and comprehensive advice are a fee for service. The next told question for you is, after today's webinar, are you planning to get advice? Yes or no? Excellent. That's great. I'm glad you're thinking about it. Often we do find a lot of our members do benefit from taking on advice, and we look forward to catching up. We have tried to answer questions throughout the webinar today, but I'll invite Jack to come on screen to answer any questions we couldn't get to in the question and answer chat.
Thanks, Clive. That was very informative. I'm glad to say that all questions were answered throughout the presentation, whether that be via the content you provided or via the Q&A chat. Back to you to wrap things up, Clive.
Thanks for that again, Jack. Appreciate that. Thanks again for taking time to come along today and attend our webinar. One last poll question before we bring things to a close. Overall, how satisfied were you with today's webinar? Excellent. Thanks very much for participating. Thank you for the feedback. We hope you've taken away some information today. Remember to reach out and to book in for a super health check or some advice. Appreciate that, and we look forward to speaking to you soon.